Good afternoon. Welcome back to Trading Options Network. Today, we're going to do our midweek recap for this week. Technically speaking, we're actually going to go back to the last Wednesday and kind of discuss what has happened since last Wednesday up until today. But of course, first and foremost, let's go ahead and get this disclaimer out of the way. Keep in mind that everything that I go over today is just my opinion, not the opinion of Trading Options Network. That being said, let's go ahead and get into it. So this is from Market Watch. Last Wednesday, we had the CPI, and the CPI did come in hot. Now, before I go on any further, I just want to go to the chart here. So last Wednesday was where I have this ellipse here. It's circled. And if you noticed, it definitely gapped down based on that CPI data. And at that point, we were still above the 20-day moving average, even though a few days prior it had dipped below but came right back up over it. When that CPI data came out, it started something. It clearly had started something, even though the following day it did kind of rebound. I'll go over that here in just a second. Can I get rid of this now? Yeah, there we go. So when that CPI data came out, the market immediately tanked pre-market before the market had opened. And even though it definitely went down a little bit, it came back a little bit, the market really didn't know how to react according to what I'm seeing here in the chart. The following day, let's go ahead and look at Thursday now. We had the initial jobless claims and the PPI that came out. Now, this was interesting because while the initial jobless claims came in a little bit lower than expected, the PPI was not as hot as the CPI. Okay, it actually came in a little bit lower than expected. So that's kind of giving us mixed signals, hence why the following day it did go ahead and actually gap up and, have a decent green day. The interesting thing about this is even though it did peak over the 20-day moving average that day, it still finished below the 20-day moving average. Not much below, obviously, but it did finish below nonetheless. Now, let's go ahead and look at Friday. Friday, we had the import price index. I mean, it's not as big as the CPI or PPI. Did come in a little bit higher than expected. So if we go back and look at this, that's probably, it's funny. I say it's not as huge, it's not as big of a deal as a CPI and PPI. But when the import price index is hotter than expected, that essentially that means we're paying more than we really need to be for imports. Of course, when the inflation is as high as it is as well, that does not bode well for the economy. So needless to say, it did cause the next day to be red. And then, of course, Monday, let's come back up to Monday. There wasn't really much talked about on Monday, I don't believe. The Empire State Manufacturing Survey, I guess it did actually come in lower than expected. However, it was better than the previous reporting. U.S. retail sales were up. So it's interesting, that we have this gigantic red bar on that day. Was it due to these numbers? I mean, maybe not. I personally feel it really wasn't. I mean, U.S. retail sales was actually better than expected, a decent, more than double actually what it was expected. And yes, the Empire State Manufacturing Survey did come in lower than expected, but still getting better. I personally feel this was a cause due to the previous CPI and PPI data and the market just kind of not trusting what's going on. That's my opinion. Okay. The following day didn't really do too much, which was yesterday. We had the building permits and the housing starts, and they both came in lower than expected. So, less homes are going up. But again, I don't think that's a huge factor into the market. Today, however, I mentioned this yesterday. If I see a big red candle today, I'm thinking we are definitely going into I'm not going to say a recession, just a pullback. Okay. It's not a recession yet, obviously, just because of a couple of days. I'm not even going to say we're going to go into a bear market. I am 100% sold that we're going to have a pullback. And if you guys have seen my last few videos or here when I was talking about it, I think we're going down to around this 480 mark. That's my personal opinion. We'll see what happens, but that is where I'm thinking we're heading, around that 480. It might be choppy and it might even be sideways for a little bit from here, but I do believe they're going down to 480. So I'm now going to take my evening and I'm going to start looking for some setups that I like that are more on the bearish side. I will still look for a couple of bulls because, again, I don't think we're out of the bullish market. But I do believe that we are going to be coming in for a pullback. So I'm going to be looking for some plays where I'm looking for weak stocks in weaker sectors. Okay. I'm not going to be looking for, weak stocks in strong sectors. And on the flip side, I'm not going to be looking for strong stocks in weak sectors. I look at the market and the market tells me we're going to be going down. Okay. I think we're having to pull back again to about around 480. That's my assumption. That's my opinion. Obviously I don't have a crystal ball. Nothing is guaranteed, but I think we see 480 before we see 520. Now that we're at the 500 mark, I think we go down $20 before we go up $20 for the SPY anyways. That being said, excuse me. Again, I'm going to start looking at sectors that have been weaker. So if I come back up here, and I did this yesterday in our training, I'm going to be looking for the sectors that have been weaker. Okay, I'm looking at the sectors that have been weaker. So XBI, the biotech ETF. It looks like there's a little drawing on here. I'm not too worried about that right now. I just want to look at the chart. All right, so this has been weak. It looks like it actually recently broke through some support. So let's see. Let's go back a little bit further here. Maybe around $80. Okay, so we have maybe what would that be from 84? We'll call it $85, $5. Was that about a 6 or 7% drop? Possibly in the biotech. So I might be looking for stocks that are in biotech. Come back over here. I typically like to stick with the spiders ETFs. So like the financial, energy, technology, consumer staples, those 11. Let's see. Which one? Ooh, healthcare has been getting beat up these last few days. Now healthcare has actually been a little bit stronger, but has definitely been getting beat up lately. And this is definitely one that I feel is also due for a pullback and already has pulled back, obviously. Maybe down, maybe a little bit, not much. It could have some support right here. But if it does break through there, then the next line of support is probably all the way down here. So healthcare could definitely be one. But again, that's just kind of on a pullback as well. Let's see if we have any that have really been struggling lately. Technology. I'm not going to say technology has been struggling. Real estate. I talked about this one the other day. So let's go to technology really quick because this one's a little bit more interesting. While it hasn't been weak by any means, it hasn't. All right. I can't get rid of these lines right now. Ignore those lines. Okay. But nonetheless, I'm not going to say technology has been weak, but because it hasn't. However, it has definitely been more neutral than bullish for the last month. Whereas the other ones have been more bullish and have just recently started pulling back. This one has been pretty neutral and it's been pretty much in about this 210 range to about this 205 range. So it's been up in this range for about almost 2 months actually, and now it's really starting to break down. So I would not be surprised if technology starts seeing the biggest pullback. And let's be honest with ourselves, technology was probably one of our bigger bulls the end of 2023 and early 2024. So this one could very easily come back quite a bit. Real estate, same thing. This one's been neutral for quite some time. It hasn't really participated in the bull market with the exception of the end of 2023. And as soon as 2024 hit, it's technically has been slightly more bearish than bullish, but at the same time, it's been kind of neutral and has just broken that trend. So this one could be one that, I might want to look at stocks that are in the real estate industry as well as the technology sector. Technology sector is huge. Real estate industry, the sector, is not nearly as big as the technology sector, but nonetheless, I I think both of them, oops, wrong box. There we go. I think both of them can have some really, really good bearish plays coming up. Let's see, some price. You know what? With technology being as big as it is, I'm going to go actually over, I'm going to jump it up. I'm going to say over 30. Optionable, of course. Most of them are already, though. Average volume over 2 million. We still have 73 stocks here. Apple has been weak, so this could be a great opportunity for some bearish positions in Apple. Adobe has been pretty weak. Let's see, other ones that I know right off the top of my head. Actually, I haven't looked at Salesforce in a while. Yeah, I'm not surprised Salesforce has been a little stronger. But although it did gap down, my guess is it probably just had its earnings a few days ago. CrowdStrike is probably, it's actually been a little bit weaker than I was expecting. I haven't looked at this one in a while. Dell's probably, no, actually Dell is okay. Dell's been an outlier. What about Enphase? Enphase has been kind of neutral. Fortinet is one I actually have had a lot of plays on recently. Let's see if I can find a big one. Cloudflare. Oh, this is an interesting chart, actually. Yeah. See, it gapped up due to earnings. It does have earnings coming up. I actually really like this chart because we had this triangle here and it just recently broke down. And it almost broke down right when you would expect it to break down as well. I like this on the bearish side for sure. So this will definitely be one that I'm going to put on my watch and possibly open up a bearish position tomorrow. I just really like this chart. It looks very bearish to me, especially coming into earnings. Earnings have not been great recently from what I've been seeing anyways. So I'm going to definitely jot that one down. All right, let's see what other ones have I seen recently. Shopify, yeah, Shopify has been weak. I might see this one. I'm looking at possibly doing a nice bearish position. This one, gosh, if this little doji here, after it went up and came back down today, I can zoom in a little bit. It looks like it wanted to run up, and the bears were like, nope, not today. So I would not be surprised if this just starts plummeting. Okay, again, I'm not saying it will, just my opinion. But if it does, it can drop quite a bit, especially considering this is actually right at a support level. The next support level would actually be technically right below it. Could be quite strong. But again, if it breaks hard from here, I mean, this thing could go down to, 50. It could literally be about a 35% drop, over the course of the next month or so. So Shopify is definitely one I'm putting on my radar. So give me a second while I write these down. Net and Shop. Net and Shop. All right. So anyways, I don't really want to get too much into what I'm doing right now. This is not my plan to go over different positions I might be opening. But what I do want to go over is, what we should expect, or what at least I think is going to be happening now that it appears that we have gotten confirmation of this pullback. Again, I already mentioned it. I think we're going down to 480. We could even go back further than that. But I think 480 is going to be the first test. Excuse me. If it does go down to 480 or past 480, if it breaks through, we could potentially go down to about 450. Now, if we do go down to 450, I will personally say there's no way we're going to go down much further than that unless something big happens. I think 450 is pretty much the bottom of this pullback. I don't see us going down any further than that. But that being said, I think 480 is a good target for now. And then see what happens if and when we do hit 480. And if it does break below 480, we can see 450. If it bounces off 480, at that point we could potentially see the market going back into a bullish market and possibly getting back into this 500 plus range. Coming up, we have our initial jobless claims tomorrow, the Philadelphia Fed manufacturing survey. These things can definitely move the market. Nothing much. Chicago Fed president speaks on Friday. Let's see. Yeah, next Thursday. We'll talk about that when we get there, is GDP. But we don't really have too many, big, news, economic reports coming out in the next few days, with the exception of the initial jobless claims and maybe the Philadelphia Fed manufacturing survey that has moved the market in the past. But after tomorrow, we're really going to understand what the market sentiment is. So that being said, I'm going to let you guys go and, start doing some research on some plays that you might want to look into for the upcoming couple weeks. If you have any questions, obviously don't hesitate to reach out to me. But again, I'm looking forward to really looking at some plays tonight and opening up some bearish positions tomorrow. Again, that's just my opinion, but I think that's where we're going in the market. You guys have a great rest of your evening now. Bye-bye.